The main markets in the past trading session had mixed results. They were up 0.16%. After such a big day in the main markets in the previous session, the main markets just said, I need to take a breather. This is quite normal. Today, we're going to look at if the markets can continue onwards. Let's run the numbers. Hi everyone, welcome back to the Daily Show. We're going to look through the main structural levels and understand where the markets are probabilistically headed. If you're seeking to get X-ray vision to know what other people don't know about the markets, please like and subscribe. The main markets, were very heavily weighted to the downside. That basically meant that there were so many shorts inside the market. When we had any type of positive news, they were going to get smashed, and they did. With a lower than expected CPI reading, just right across the board, we saw yields fall, the DXY fall, and there was some pretty significant information released in yesterday's trading session. Let's have a look at that. The high economic data impact releases, the core PPI, the PPI month on month, core PPI month on month as well. We all saw lower than anticipated increases. Now, is this good or bad for the economy? And how does it relate to the CPI? PPI, CPI, what's it all about? The easiest way to understand the PPI is like business inflation. The CPI is personal or consumer inflation. Because the PPI is all about the prices of different components into the manufacturing process and the services process. It's often said that the PPI is used to predict the CPI. When we look at Friday's economic data releases on the inflation rate, it was all lower than anticipated. That dropped the yields off and that dropped the DXY down, the US dollar currency index, which caused the stock market to absolutely rally, as well as the euro dollar. We see that continuation inside the PPI, but we're seeing something else. Retail sales are coming up. What does this actually mean? It means that retail sales, the consumer, is still strong. Retail sales are a key component of GDP, or gross domestic product. You can think about it like the gross revenue of a company, GDP, gross revenue of a country. The New York Empire State Manufacturing Index, this is all about just optimism and forward-looking orders and all sorts of things. This is optimistic as well. What does this tell us about the economy or the economic system? It basically says the US is turning the corner and in all likelihood avoiding a hard or a soft landing. There may be no landing at all. This will get reflected into the probability of a rate hike increase. Yesterday, there was no percentage hike increase, and now today it's 2.7% at the next FOMC meeting on the 13th of December. All charts are intercorrelated and interconnected. What does this mean? When the CPI was really underdone, when it was coming down, and a lot of people say it's the CPI, not the CPI. So let's, the governments can do really interesting things with their numbers. The concept is that we can see that there's negative price momentum inside yields or percent momentum, and that's really good. The economic system was getting really very dangerous. When yields come down, typically gold will spike because it really is reactive to real rates. That's rates after inflation. So if inflation is coming down, rates are coming down, gold is going to go for it. And that's something to bear in mind. The dollar, the DXY, when the DXY spikes down, it's usually accompanied by a real big surge in upward momentum inside the stock market, but also inside crypto. We can also see that oil is coming down at the current time. A couple of days ago, the S&P 500 just breached this really strong area of structural resistance, and if you're inside the service, the S&P 500, the SPX indicator was updated. The next area of structural resistance for the S&P 500 is this 45.31 to 45.44. If we get a retracement down here, that would be really normal. We've had such a big surge up. Getting a retracement down to structural support is actually very healthy. And we can see there was a little bit of negative momentum inside the main market. I find it really good to keep your eyes on these dollar pairs, the Forex currencies. They're incredibly powerful at predicting price movements in the main market and also in crypto. This blue line across the background is Bitcoin's price action. Notice right now it's following the DXY. The DXY often inverses Bitcoin, but not right at the moment. This is why we need to be flexible. What you will find, all markets are structurally bound. What this means is that when an area of smart money support gets violated, price will go down to the next area of stronger structural support. And this is happening inside the DXY. These areas of structural resistance and structural support are drawn up throughout all of price history, not just recent indicative price. We can see that the DXY fell to very strong structural levels. These structural levels between 103.7560 and 104.0311 have held so far the DXY's descent down further. And it can get really terrifying when you look at price action and you see price just coming down like this, like this, like this, but you don't know where the structure is. You just naturally think it's going to zero. It's going to structural support. How is this possible? This is just the way the financial markets move. Structural levels give us such an incredible advantage inside the market. They're valid for 1 month, and some are valid for longer as well, but the markets are always changing their perspective on different charts, so that's why we use objective dynamic market structure to mark up price action. With gold, it's been trading for nearly 70,000 days, and these bands are called SCs. SCs just capture these structural levels underneath gold's price according to all of this price history. What we can see, they act as safety nets. When you have safety nets below, they tend to catch price and rebound it. And when you have a ceiling above, it tends to get harder and harder for price to get through it, especially the more ceilings you have. And that does tend to make a lot of sense. When you get a ceiling, it's generally negative price momentum, so you get these kind of consolidation actions. If it can't get above, it's going to the one below. And when you get weakness inside the market, it's typically because not only of these structural levels and how far and fast prices push through them, but it also relates to any structural levels above price. If you get a lot of structural levels above price, you're going to get a weight down on price. This is why gold could have a bit of trouble getting through this particular area above 1985. It's all about the structure. You'll find it an absolute game changer when you understand where it is. For example, with Bitcoin had an enormous amount of structural support between 35,175 and 36,221. We were buying all the way into this structural support, even though Bitcoin's price was coming down. When you hit structural support, especially strong structural support, you expect a bounce. And 5% targets on Bitcoin were just met easily with the past action, and this is very normal. So where could Bitcoin be going from right now? It would be really reasonable to see a retracement to around that 37,000 and then a push back up if the bulls remain in control. If the bears take over, we would expect still that 37,000, but it probably wouldn't hold and would try to dip into this structural support area between 35,175 and 36,221. Bitcoin is currently 37,749. One thing to bear in mind, and I'm sure a lot of people are not aware of this, at the moment there is very heavy structural resistance above 40,000. What does that mean? It means it's going to be tough for Bitcoin to get through it. You might remember this structural resistance just suppressed Bitcoin's price for ages. Everybody was saying, what's going on with Bitcoin? It should be rallying. It was the structural resistance. We have such an amazing global family. If you're liking the content so far, please smash that like button and don't forget to subscribe. A big thank you for watching, and if you've commented, an even bigger thank you. Thank you again for watching and for commenting. It's just wonderful to have you here. Much gratitude. Don't forget to tell your bankers the crypto assets account for less than 0.69% of global illicit finance. When people come to you and say, oh, crypto, that's just for scammers, show them this statistic and you will see that it's rubbish. We've seen the crypto market come up strongly because, of course, Bitcoin came up strongly. Congratulations to all the people inside Solana. They did really well as well. There were a lot of fantastic gains broad-based across the crypto market. What I love about crypto, and I've been in the markets for many, many years, I love that it's so volatile and it's very forgiving. It can come down like a brick, like Bitcoin did, into that structural support area and then bounce off that structural support, and it's just fantastic. Inside the stock market, that could take 3 to 6 months to do. The banks are making it really hard for people to get across to crypto because they run the platforms into the stock market. And as soon as they capture the platforms into the crypto market, crypto will immediately and instantly become safe. Looking across the top projects, we can see Bitcoin doing well, Ethereum not so well, but it's still pretty good, BNB under. Bitcoin is really going for it. Now, why is this the case? We pointed this out in yesterday's video. It's because total crypto market cap is under a level of resistance, and that's not the same for Bitcoin, so therefore we would expect this to outperform the alts. But what happened with Solana? Ken, you're clearly wrong. Solana is an alt and it's just popping. We know why that's happening too, because it's entered a positive fresh air gap. It has little to no structural resistance above for literally another 40% price appreciation. Please don't FOMO in. Buy with intelligence and buy on retracements. That's a pretty good way to go. The last time Solana was up, just punching up here, we saw that it did a near 20% retracement. So just keep these things in mind. A lot of people get into an overheated, over-focused crypto or overheated, over-focused stock at exactly the wrong times. People are saying, oh, you've got to get in. It's fantastic. It's fantastic down here, more fantastic down here, more fantastic down there. And don't worry about buying the bottom. Just participation is the key. The greatest gainers in the past 24 hours, CAS, Render, Rune, AVAX, FTT, CRO, Synthetics and Cake. The greatest losers past 24 hours, top 100, Celestia, Arweave, Monero, Tether Gold, Matic, Leo, PaxG, BUSD, oh poor Peter Schiff, somebody send Peter Schiff a hug. Tether Gold and Pax Gold are down. And of course we do love gold, gold is cool, but we love stirring Peter more. We've seen a lot of short liquidations across the past 24 hours in the crypto space. That's why prices have been coming up, but not across everything. These green boxes mean, well, what do they mean? They mean that the longs have been liquidated, not the shorts. And what do the red boxes mean? It means the shorts have been liquidated more than the longs. And this is a pretty good point. Both long and short are getting liquidated all the time. It's very rare that you will ever see short liquidations 100%, long liquidations 0%, or the other way around. This is just the nature of the beast. Going long and short does carry a lot of risk, but that gearing carries a lot of benefit as well. But please make sure that you know what you're doing before you get into it. I was mentioning about Solana. Solana has overcome its structural resistance, and that's that 20% drawdown from up here. And what are we seeing? It's starting to enter a fresh air gap, and that is a big fresh air gap. That's mighty. The shorts will be all over this. I was mentioning that when price gets above this particular level, we would expect upward price momentum, but price is always moving in a wave. People are taking profits, people are recycling, people are doing all sorts of things. People are going long, people are going short, people are buying at spot, people are investing, people are trading. And this brings about a really key thing that I wanted to talk to you about today. When it comes to financial markets are not a gladiatorial match when you're sitting across the computer screen from somebody who wants to garrote you or fight you or take your money. That's not the case. Trading and investing is all about synchronization in with the market. When you understand market structure, you don't have to view it as a competitive game. A lot of people view everything as a competitive game, but it's not. For example, if you go and trade your money for the latest phone, did you lose because you gave somebody else your money and they gave you something else? No, you don't lose. You got what you wanted. When people buy and people sell, they do so for a million different reasons. How the market works, it's just an accumulation device. It becomes a big pot of money, and the market says, hey, you know what you're doing, I'll pay you. And when people don't know what they're doing, the market says, hey, it's time, I just want to educate you. If you do that differently, I'll pay you, so I'll give you a loss. And of course, people get very upset. I don't want a loss, I just want profit. I want all the days to be sunny and never a rainy day. That sounds like a bit of a nightmare, or a desert, either way, but it doesn't work. What actually occurs inside markets? When people are fearful, that's when you should be greedy. And when people are greedy, that's when you should be fearful. And it's a very good thing to just bear in mind. Price is always moving in a wave. If you buy at structural support, you're going to do really well. But what happens if there is no structural support? Because that's kind of where we are right now inside Solana. This is exactly why Solana's price chart is just beating all the others. It's in fresh air. There's no resistance to keep it down. But what about this? This is just profit taking. This is natural, consequential movements and action in Bitcoin's price projections and total crypto market price. Trading and investing is not a zero-sum game. You're not in competition with anyone. You just need to pick up the knowledge of how to get synchronized in with the market, and you will get paid. It's that simple. And it's important because a lot of good people don't want to go into combat with other people. They don't want to take other people's money. I know I struggled definitely with this problem when I first got into financial markets, and I did a finance degree. What you will find is there's so many participants inside financial markets, they don't all think the way you do. Most of them think completely differently than you do. If you're going under leverage, you might be doing 100x leverage, and somebody might be doing spot. You might be going long, somebody else is going short. Somebody else is investing, someone is really tight trading. There's so many millions and millions of reasons. We can't all make the reason of every single other player in financial markets the same as ours. That just doesn't work. And when we look at Bitcoin is really rocking and rolling because it bounced from structural support, and it's got a lot of air gaps above it as well. When we look at total crypto market cap, that's just punched through an area of resistance. That resistance is suppressing the alts, but we can see Solana is doing well. But this all makes sense when you understand structure. For those trading inside the stock markets, keep your eyes on the futures. For example, if the futures are going up on the S&P, the Nasdaq, the Russell, the Dow, and you're trading in Australia, look at that. You've got a very high probability of the Australian stocks going up. And of course, it applies all around the world. This is important to understand. Just keep this one in your back pocket. It will make you a lot of money. Always seek to maximize and optimize your synchronization score. It doesn't matter what the markets do. They can go down, they can go neutral, and they can go up. And if you have the right strategy, you're making money no matter what the markets are doing. It is possible to do so. Keeping positive is incredibly important. If you feel like you're in combative relationships with the market, you're rejecting the market, and therefore the market will teach you a lesson. It doesn't do so out of any animosity, it just does it. We've all been through it. If you're going through a series of losses, especially mind-numbing losses, you're actually really fortunate. You're at a point where you can look and say, I need to do things differently. What I've been doing doesn't work. And you might find that what you were doing, and everybody goes through this, I've gone through it many times in the past. It takes time to become consistently profitable because you have to unwire your natural reactions to the market. When people first enter, they think that they can make 100% return and 0% loss. They're going after these 100x's, 1000x's, and it's just nuts. In doing so, the 1000x can cut you immediately to zero as well. It's little wonder that people do a lot of panic, and they get angry and they start blaming. This is very normal. This is just the normal stage that every single trader and investor goes through to become consistently profitable. If you find yourself in zone 1 and zone 2, it's important to be really kind to yourself. It's okay. It's a rite of passage. Zone 3 is very different. The difference between zone 1 and zone 2, where people lose money because they have rules that make them lose money, but they don't know that they have those rules. What occurs when there is deep losses to the point where you can't sleep at night, you've got a knot in your stomach, your heart has literally fallen out of your body. We've all gone through that. To get to zone 3 and zone 4, it is a rite, unfortunately, of passage. But if you're very fortunate, you can find mentors who can teach you how to deal with the market so you don't have to go through those kind of mind-numbing losses. But to do so, you must be very open to learning. And it's important not to pick people who are in zone 1 and zone 2. If they're in zone 1 and zone 2, they'll teach you zone 1 and zone 2 things. Zone 3 and zone 4, where you make money and you keep it. Making money is one thing, but if you don't keep it, what's the point? In zone 3, people look at percentages especially. They understand the role of percentages in a way that people inside zone 1 and zone 2 aren't even aware of. They have so many rules, like price moves in waves. No alt can escape Bitcoin's gravity. Bitcoin cannot escape the stock market's gravity, and hundreds of others. Every time they get a loss, they create a rule. They're kind to themselves. They look at it with a learning experience viewpoint. And understanding how price actually moves is key. Price reality, not story-based analysis, is the key to profitability. To keep your money is a very different thing. A lot of people say, and this is especially true inside zone 1 and zone 2, it's all win-lose, it's scarcity. If somebody else is winning, it's because they've taken your success or somebody's success. That's poor thinking. Rich thinking is still win-lose thinking. Zone 4 thinking is wealthy thinking. It's win-win. And many people inside our global family are zone 4 thinkers. In fact, the majority. Why is that? Because they understand a person winning does not cause you personally to lose. Of course it doesn't. It never has. With scarcity thinking, people would say, oh, I've got to guard this secret. I can't tell anybody else about it because then they'll gain an advantage and I'll lose. The pie is big enough for everyone. But that is zone 4 thinking. The pie is big enough, and zone 1 and 2 thinking, there is no pie. I have to fight for my life over the scraps. And if you're thinking from this particular basis, how could you ever be consistently profitable or wealthy? Because that method of thinking will repel success and wealth. What I do inside this community is that I tell you what you need to know, not what you want to hear. Most people want to hear, this is the next 1000x alt. Buy this and become rich. Do no work and you will be awesome. In fact, just be lazy, never work again. Oh my God, what a boring life. Can you imagine? Say you got that wish. Say you got the wish of doing nothing, like the Office Space film. Oh my God, what a great film. If you had your wish of doing nothing, if you just basically said, I don't care about anything. Oh, he was a great character. TPS reports. If you know what I'm saying, please pop in TPS reports in the comments. But the idea is, you don't want to go through life just thinking that your ultimate goal is to do nothing, to lay on a beach, to sip margaritas. Oh my goodness, that's such a boring existence. You want to contribute back into society. You want to share what your passion is, what you truly love. Wealthy thinking is something very, very different to rich thinking, and it's very different to poor thinking. One thing to understand, poor thinking can be done with people with lots and lots of money. You can see it all the time. You know that person who is very wealthy that never brings a drink or anything to the party. They just want to leech off other people. That's poor thinking in practice. Or the highly competitive people who just have to show off everything. Or the other people that don't even want to be seen. That's a different way of thinking, but they want to contribute. We all have a choice in our lives if we subscribe to poor thinking, to wealthy thinking, or to rich thinking. Wealthy thinking is the one that makes you sleep really well at night. Wealthy thinking is all about learning and not blaming. Inside Zone 1 and Zone 2, everything is blame-based. Every loss is somebody else's fault. And unfortunately, if it is somebody else's fault, you are powerless. Who the heck would want to be powerless in this world? You are powerful, and the way to become powerful is to learn. How do I do better the next time? Just wipe off what happened. Don't hold on to the burning hot coal. Just drop it. That's where it's supposed to be, on the ground, cooling off. You'll find that you go through many setbacks in life. Each of those setbacks, these life pullbacks, will give you the strength for the next life rally, but not if you blame. Not if you can't let go. Getting on with your life is incredibly important. Always understanding that the universe wants you to succeed. A lot of people inside Zone 1 and Zone 2 would never show kindness. They wouldn't show integrity, and they would not show gratitude. After all, they're fighting over the scraps of the pie. If you feel like that, just know that there's a different way to think, a way to think that can make you really happy with your life. Life is not what you get, it is who you become. You can't take anything with you when you go. When you understand by default that you are worthy, that opportunities and life reset daily. Don't be in a hurry, just start small and scale. Always be dedicated and committed. Show up when you don't want to show up. Put the best possible effort in when you want to be lazy, when you're tired, when you just don't want to do it or you can't do it. And always solve your problems with positive excellence. You will find a life that is just magnificent, and it's within your grasp right now. All you need are better habits. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.